Hello, everyone. Welcome back to Crypto's News. It's me, Omar Bam, aka Crypto. So happy to be here with the usual suspects. What's up, Renee Papp, Decentralized, First AF. That's a true OG, man. That guy's been around way longer than I am. So honored to have you here, man. And yeah, of course, like you, Renee, who's been tuning in for so long and supporting, and I'm glad you finally caught us live. And Kevin, who's always shooting nice messages, including on Father's Day, wishing me a happy Father's Day. Not a father yet, but I got some dogs, so I don't know if that counts. You guys remember Wallace and Winston. Anyway, yeah, happy Father's Day to those of you who I didn't get a chance to wish that to, who are fathers, genuine fathers. Appreciate you guys. Welcome back to the show. We're going to be talking about what's going on with crypto right now. Crypto is getting a surge in new energy. It's been over the last 7 days, a resurgence in interest in cryptocurrency. Previously, you had a situation where it was just like negative news after negative news that was being fed to the mainstream. The average person who hears about cryptocurrency really only knows Dogecoin, and they know that cryptocurrency is a giant scam, that it's terrible, that maybe they lost some money on it. And every time they turn on the news, it looks like Congress is saying it's bad, politicians are saying it's bad, Democrats are saying it's bad, and people need to be protected and be very, very wary. Anyway, so for the most part, they've probably written off this whole thing. They're like, well, Bitcoin, what is that? Isn't that thing dead already? I thought it was dead. I haven't heard about Bitcoin in so long. Ethereum? Oh yeah, what is Ethereum? Anyway, now I think we're about to begin to see the positive news cycle begin, because it looks like some big market players are beginning to enter the news. So when people turn on their news now, they turn on their I don't know what people listen. CNN, Fox. What do people listen? CNBC. They're going to probably be seeing a lot more about cryptocurrency in a positive light here. You have Congress paying more attention, trying to get more clarity around laws. You have big players like BlackRock. You probably know them. They probably own your mortgage or all the real estate near you. They're beginning to get involved here and with an ETF. So we're going to be discussing that, why people are getting so excited, and why we might even be entering a new phase here where we're realizing that crypto is definitely not dead. In fact, this might be one of the most opportune times to be buying in, which is why you're seeing, despite some of what's gone on recently with the SEC, Securities and Exchange Commission, coming out seemingly on an all-out attack on cryptocurrencies. You had Binance, one of the biggest cryptocurrency exchanges, being sued. Coinbase, better looking players out here looking like they're trying to take the head off pretty much all the top heads of this Hydra in order to put new incumbent financial players at the top. So we have conspiracies around that. We have excitement about new capital entering here. And then, of course, concerns about what's going to happen with Coinbase and Binance. And the average, I don't know. So much going on here to dissect. Let's get into it, guys. Let's start off by looking at the prices as we do today's tour. As always, remember to hit the like button if you enjoy this content. Subscribe if you're new to the show. And please share. Get the word out there. We're doing weekly recaps on the most important topics and trends in cryptocurrency. I think following on a weekly level is a pretty good thing, because it means you're not really following that active day-to-day noise where you can get confused on what's important. Instead, we try to focus on what I think will be most relevant to you to see the trajectory for where we're headed, to make sure you guys stay on top. So happy to have you guys as always on board. Let's go ahead and hopefully everything is good technically get started. So when we're looking at the prices here, as you can see, over the last 7 days, it's been a phenomenal run for Bitcoin. Oh yeah, you guys can see Bitcoin is up 19.4%, almost 20%. Not too shabby, right, for an asset that has a $580 million market cap. Phenomenal. Bouncing off these lows recently with the SEC news again against those exchanges. It looks like Bitcoin had wanted to go down all the way to maybe $25,000, but held up at support and has since bounced back. It looks like, indeed, as we were talking about last week, just a great buying opportunity, at least to be be dollar cost averaging, because potentially we could be looking at much higher prices for some of these limited assets when you're looking at inflation, which continues to run high despite the Fed pausing. Inflation will continue, my friends. It's just going to continue at a slower rate. So expect food prices to go up near you, more money printing, which eventually will eke its way over to these cryptocurrency assets. And it's just going to be very embarrassing, I think, for fiat currencies and real staunch supporters of them. For people who support dollars and euros of the world to see something like this, what's possible when you have a limited supply. So yeah, you have Bitcoin up a huge amount over the last 24 hours, up 6.3%. It actually broke $30,000 today. You have Ethereum. It had also broken over $1,900. It looked like it wanted to test the $2,000 region, but it's since pulled back a little bit. I'm hearing from sources, from traders out there who do analysis, that Bitcoin is going to struggle right now to really break around $32,500. But if it breaks $32,500 and the bears cannot slam it back down, then I'm sorry, bears, go back into hibernation, because Bitcoin is about to embarrass you and go up to $40,000, because there's very little in the market books, in the order books, selling between $32,500 Bitcoin and $40,000 Bitcoin. It's just a no man's land, and you could really see a huge spike if it does break that. And it looks like Bitcoin wants to, with this news that we're going to get into. And it's the same thing for Ethereum. I don't know the exact numbers, but the next major resistance there is a $2,000 critical psychological level. So yeah, you're seeing moves all across the board. As you guys know, I primarily focus on Bitcoin and Ethereum, so I'm not going to be getting into everything else. Such as fears that Lido is taking over Ethereum's decentralization by having too much staking power. Plenty to get into, but in the weeds, like I said, going to focus on kind of the major trends of what's going on here. Solana, wow, up 18.5% over the last 7 days too. Surprise on that one, since it was quite attacked by the SEC. But yeah, we also saw Bitcoin dominance. I think it was 2 days ago. It managed to breach 50% and stay over there for a little while. So we haven't seen Bitcoin for like 2 years reach a dominance of over 50%. So pretty phenomenal. It's now back to 48% dominance. And Ethereum is at a healthy 18.7% dominance. Market caps for crypto overall, $1.2 trillion. Booyah, for a nothing asset class, for something that came from nothing. When you had Bitcoin traded, I don't know, like just over a decade ago for basically pennies, now you're seeing over $1 trillion market cap. Still nothing, I think. As you hear others point out, you have Microsoft over like 2.6 or $2.8 trillion market cap, Apple at 2.4 trillion. I probably have those backwards, but this is just like half of one of those companies, so it still has a lot of a way to go. Crypto Fear and Greed Index, you're seeing that right now. Oh, thanks, Renee. Happy everything's sounding super clear and the sound is balanced. It might have been actually a cord on my microphone. For those of you who were hearing a lot of glitches, pulled out a new cord, and so far, so good. It looks like everything is much better. So thank you so much for the heads up on that. Anyway, Fear and Greed Index is over 50, meaning that we're in the greed territory, but not overly greedy. As you can see, last week we were at 46. So a little bit more hesitant in the fear territory. And last month we were quite neutral at 49. So last week was because of the SEC. But pretty much we've been hovering around this middle area. So yeah, I mean, it's a good thing, of course. It means that we're not overly greedy. We don't have the mainstream really involved here. And this is probably right time to be buying based on what we've seen historically happen in the past, looking at this index and how attention is driven to crypto. So there were a lot of liquidations, of course, primarily people who were short Bitcoin. A lot of the bears came out after the SEC news. That was just slam after slam after slam to say, I told you guys this bear market wasn't over. Take a look at my chart that I showed you guys back in 2021. Turns out I might in fact be a genius. Yeah, we're still going back to $15,000 Bitcoin. That's the more realistic conservative ones. And you have those that are like, yeah, we have Bitcoin back going to $5,000. Then you have the others who are like, yeah, actually Bitcoin is going to zero. Peter Schiff. So anyway, it looks like the shorters were pretty much wrong with what we're seeing right now. I can't really imagine a scenario, at least in the near medium term, where you're going to see Bitcoin drop to any significantly low levels. And then if it doesn't drop in the medium term, what are the bears going to do? Because we got the Bitcoin halving coming up, baby. And we have all sorts of other effects like Ethereum's ultrasound money thesis, the triple halvening coming out, and maybe beginning to take roost here. So, I mean, with Ethereum, it wouldn't be too surprising to see a pullback here. This is a chart that I had found, somebody had shared. I didn't do the lines myself, but it looks pretty legit, and I've seen a few other charts that look exactly like this. But you can see here that based on this resistance and support lines, this is on the daily, Ethereum versus US dollar, that we shouldn't be too surprised to see Ethereum at least pull back here, stay within this triangle region before it breaks. It looks like it has a little bit more power to the upside, and again, not too surprising with the current news cycle that it would break to the upside. So yeah, I guess this would probably point to Ethereum coming back around 17 or something like that before a bounce up maybe, and then breaking out of this territory. So nothing, I don't think we're going to see immediate continuation if this chart rings true. But right now, I think Bitcoin is the big leader here with this ETF. Bitcoin is the kind of thing that will attract a lot of the initial liquidity, likely from the big firms, from the institutions. Bitcoin has less to probably fear from the regulators like the SEC in the near term. It's just a safer play. It's always been that Bitcoin is a safer play. The more and more you go down, well, you don't have to go far these days, down the market cap rankings on CoinGecko, generally the riskier things are, more risk, more reward. But Bitcoin at the top, if you just want to play the safe game here, is the place to be and is the most trusted household name here. So it tends to see the onslaught of liquidity first before it goes to other coins, namely like Ethereum first, and then move on to riskier plays. So yeah, not too surprising to see Bitcoin having some of the biggest moves here with that 6.4% gain over the last 24 hours. But I digress. You have here ultrasound money. So Ethereum, haven't showed you guys this in a while and pulled it up. So this is ultrasound.money. There were some major upgrades that came to Ethereum, the second most by market cap cryptocurrency. And these were upgrades to the economic policies around Ethereum, how much Ethereum gets printed, and how much Ethereum actually gets burnt. Something I guess you don't really see with the US dollar. Who's out there burning cash, real cash, in their music videos these days? I don't see it. I don't even watch MTV. I don't even know if MTV is a thing anymore, but I'm pretty sure they're not burning cash in some of these new modern, newfangled music videos. Or burning cash in any sort of sizable amount. Anyway, my point is more money, fiat, is being printed daily, where you have a situation with Ethereum it's actually getting burnt. So let's take a look. When since the first, so you had the policies of EIP 1559 and Ethereum Improvement Proposal that first began burning ETH, and then eventually Ethereum turned into a staking model where if you want to get ETH, you no longer power up your some sort of crazy graphics card and all that and have all this computing power in order to get ETH. Instead, you just take the ETH you have and you stake it, and then you get more ETH by putting the ETH you put up at risk in order to get a chance to validate the ledger. Anyway, all of this has resulted in less issuance for ETH. Let's take a look at the supply change. Had it been, let me pull this up right. Since the merge, you're seeing a total of, if we're still on proof of work, if we're still on the old way of getting ETH, which is powering up those graphics cards, mining hard and dirty, it would be a total of 2,933,073 ETH more that would have been issued had that still been the case. But since we have had that merge 279 days ago, I can't believe how time flies. Instead, we have a supply change of negative 282,303 ETH at a time when you have more and more institutional players and others trying to accrue these damn things. There's less out there, less liquidity. And imagine, just imagine where this is headed, guys. Imagination. Bitcoin price spikes to $138,000 on Binance US. So you know that Binance was a target of lawsuits. They have since settled, basically. They have come to agreements whereby people are not going to be losing money that's on Binance. They're not going to be losing access to that. I didn't get too much into that, but point being, it doesn't look like it's going to be a complete tragedy for Binance here. It just looks like CZ, the CEO of Binance, is going to have to cede control of those wallets. Funds are going to have to be moved to another wallet that is more transparent and distributable and so on beyond just his hands. But you're still seeing liquidity issues on Binance US, so the price was pretty damn good if you were trying to sell some Bitcoin. If you had some orders for Bitcoin on Binance US at up to $138,000 per Bitcoin, then damn, you might have actually made quite a bit of money. It looks like there was a trader who wanted, according to this article on CoinDesk, I doubt he wanted to, but anyway, trader who wanted to pay a nearly 450% premium for Bitcoin, which is currently actually just trading at most exchanges at a consensus price of $29,000 in euros in Europe, morning hours on Wednesday. But anyway, yeah, the price for a few seconds at 6:50 a.m. UTC, it spiked all the way up to $138,000. So I don't know. When you guys win, I hope you won. Sometimes there's, some people win out in these random fluke accidents. It pays, like I've always said in the past. You've seen it happen with Binance. You've seen it happen with Kraken, with flash quick crashes and flash pumps. You've seen it happen on Coinbase. Even order books that usually have a lot of depth, you can see this happen too. It pays to sometimes have orders at ridiculous prices. Buying Bitcoin super cheap, having those limit orders as they're called. Sometimes it might pay. It's not like you have to pay to have those open. I don't know of any exchange that charges you to pay to have those trades open. It's not like it's a leverage trade that charges you to have it open in perpetuity or something like that. Anyway, Bitcoin and traditional assets ROI versus USD. Just wanted to share this with you guys. This was shared by Ryan Selkis on Twitter. So he's saying Bitcoin is the greatest investment asset in modern history. Here's a scoreboard. This is all the way up to 10 years. And you can see that it looks like versus gold and the S&P 500 stocks that Bitcoin just looks better and better and better over the last 10 years. 29,008% return on investment versus only 49% for gold. So it looks like Peter Schiff is going to have to keep waiting. But it's not looking good, the scoreboard for him right now. So moving on here. So this was the big news. There was rumors coming out that BlackRock, one of the biggest holders of assets in the damn world, if not the biggest, influence that is unsizable, really, when it comes to politicians, when it comes to banks, when it comes to the Federal Reserve, just the deepest insiders. Like when the Federal Reserve needed to buy assets in order to bid things up during the pandemic, who did they reach out? They reached out to BlackRock in order to do these trades for them. They didn't call you. They didn't call me. They didn't call Bank of America. They didn't call JP Morgan. They called BlackRock. And BlackRock is about to launch perhaps a Bitcoin ETF. Not necessarily that they're going to launch it, but they might. They have definitely proposed a rule change to get a Bitcoin ETF here, an exchange traded fund, which would, we don't know the exact specifications completely of it, but in a nutshell, it would basically hold Bitcoin and enable exposure to the Bitcoin price. And this could be something that could pump up the price of Bitcoin, the holding of Bitcoin for people's retirement accounts, just like any other ETF. But this one specifically for Bitcoin. We don't have anything, a real true Bitcoin ETF just yet. So this could be the first, although we're going to have to, of course, hear from the regulators whether this gets approved or not. The proposed rule change to enable this. I mean, you're going to see. Right now, Eric Bokunis shared this fun fact. BlackRock's record of getting ETFs approved by the Securities and Exchange Commission is 575 applications approved versus one. Only one that was disapproved. That's a reason why this is so big. BlackRock does not play around. So yeah, you've seen all sorts of different ETF applications get delayed and delayed and delayed and ultimately rejected. But this is one that really does stand a chance to pass. And that's why you're seeing this huge amount of excitement for it right now. And then you're also seeing a bunch of other players now coming out and following BlackRock. So you have Wisdom Tree getting announced that they're going to be doing this. By the way, the BlackRock Rock news broke on June 15th. That's exactly when you saw Bitcoin begin to climb and climb and climb. And so this is why you're having suspicions that we are entering a real phase of the bull market here at this time. So Wisdom Tree and Invesco are also joining BlackRock in filing for an ETF. So you have a fresh filing by asset management fund that's based in New York, Wisdom Tree. So they got permission to list the Wisdom Tree Bitcoin Trust on the CBOE BZX exchange using ticker BTCW just today on June 21st. So you're just basically seeing hanger-on ETFs now following BlackRock as well, and other Bitcoin products that are getting the green light here. In the past, it looks like Wisdom Tree had tried to get an ETF launched, but they were told the same thing all the other ETFs were given. Sorry, we cannot pass this because of fraud and market manipulation that is rampant in the crypto space. But as you see, the SEC has been out there trying to cut heads, even going so far as Coinbase to try to stop this. So maybe paving the way for some sort of ETF to get passed. And that's exactly what it looks like is going on right now. So yeah, you're seeing also the Invesco Bitcoin ETF. There has been a filing, a 19B4 document that has showed up, which has alerted the SEC to a proposed rule change. So this rule change is to allow a Bitcoin ETF to exist. That's what these rule changes are. Anyway, so you're seeing that kind of interest come out right now. And then something else that's interesting is that you had the announcements of this exchange that is backed by Citadel Securities, Fidelity. They have, what is it, $3 trillion in assets under management. Charles Schwab backed EDX exchange has launched. Hasn't fully launched, but it's been announced. So this is a brand new exchange again backed by these three huge players. So this is coming on the heels of Coinbase again and Binance. Out of nowhere, a new exchange that is primarily focused on brokers and institutional firms. That's the website right here, the future of digital asset trading. You can read the latest press releases. Check out this one. Wall Street is launching a crypto exchange. Why that's a threat to Coinbase. That's the last press release that is published on their website. Almost like they're trying to kill Coinbase and kill the crypto space in order to create a new, more manageable product by the old financial institutions, by the old banks who are really trying to control crypto. At least that's what a lot of these new conspiracies that are coming out are all about. So you're seeing the conspiracies across various different Reddit posts like this one. Seems like this whole operation was to just kill crypto companies and make room for the incoming financial giants in crypto like BlackRock. I would say it is time to put your tinfoil hats on as we are about to go into conspiracy theories, says this post by Party MSL. But this is actually a very realistic theory that everyone already knows in their subconscious mind to be true. This whole operation right now from the SEC and other government organizations against crypto has undoubtedly been planned beforehand with some precision and a definitive goal. That goal being to kill a lot of crypto firms that dominate the market, which would also make sense why we had the attacks directly eyed at Binance and Coinbase. They want to cut crypto off from the head. Now you may think that this is actually good, as the firms with a too high market share and massive monopoly in crypto, namely Binance, will be punished and thus a competitive market will emerge. Well, the SEC and others are clearly not doing it for us. Even thinking so is just foolish. They are doing it for their friends, aka donors. They want to clean crypto up and empty the market field for the big giants to enter and take it all. Those will be the likes of BlackRock, Soros Fund, JP Morgan, Citadel, and many other banks and investment firms that have seen how much money may be left in crypto to make. Then this post by the Francois 3 days ago. Am I the only one thinking BlackRock wants the price lower to enter the space? Maybe that's why we saw these huge attacks. What's the old saying? Follow the money. The SEC and all the other three-letter agencies were entirely asleep at the wheel with FTX exchange when that collapsed. But then they decided to mess around with Kraken. Kraken being apparently quite clean, they removed their ability to remove staking as a service for reasons unknown. Coinbase and Binance are free to still offer this. So this is basically talking about how Kraken settled with the SEC. They paid a huge fine, something like $30 million for allowing for the staking of different crypto products. Just for managing that, right? They weren't like directly offering you returns. They were just helping manage that for folks. They had to stop that service completely, like you're seeing with Coinbase. Because it could have happened with Coinbase as well, where they stop all their staking in other companies as well. After what happened with the Kraken, to avoid problems with the SEC, but they decided, no, this is wrong. Instead, we're going to fight the SEC and not merely settle with them to create precedent, which I like to see. Unfortunately, Kraken did not go that route for various reasons. Maybe they had more assets they thought were securities that they offered for staking or something else. But anyway, that's what this is about. Coinbase and Binance still are free to offer this staking because they didn't just say, oh, well, you gave it to them, I'm going to get it next, I better be careful. Then they get into the very public passing match with Coinbase, continues this post, who's fighting back quite hard, so that goes quiet. Then Binance has its turn in the crosshairs, dropping prices. Now we see exchanges delisting some fairly prominent layer ones, which we covered in the last show. Then buried on the back pages is news of BlackRock filing for a Bitcoin ETF. More are sure to follow, which they did since this post. In my opinion, the connection to these is that so many institutional players and big investors are looking for custody solutions. In the past, these were people keeping their coins on exchange. And if you want to self-custody, well, Ledger went and screwed themselves too. Sure, there are plenty of other options, but the seeds of doubt have been planted. I like that. Seeds, the punning, the use of that. Anyway, yeah, we know what happened with Ledger as well and how they shot themselves in the foot, almost like on purpose, just bad PR after bad PR, like what you're seeing with Reddit, right? With Spez, with the CEO of Reddit, how he's just like tripling down against the people. Anyway, Ledger went and screwed themselves too. Sure, there are plenty of options, but the seeds of doubt have been planted. And now with the SEC going after big exchanges, they're sowing doubt there and creating a space in the market for a new trusted custody provider. Don't get me wrong, I love new entries into the space, but the use of political connections to weaken the competitors as you seek to enter is some nefarious crap. Now, we've all seen how these songs end. Not your keys, not your coins. Also, I have suspicions BlackRock will create paper Bitcoin, though I'm sure they'll hold some. So fractional reserve Bitcoin. They probably, for example, I mean, you're seeing with this with other different crypto platforms, when you make some sort of trade within the platform, they're not going to show you that trade link to either scan or some sort of Bitcoin block explorer, any block explorer. So there's no verifiable way to prove that the Bitcoin actually exchange hands. Maybe they don't even want it to actually exchange hands. They keep it on their servers and they move the Bitcoin amongst themselves and their own crony friends. And this kind of opaqueness allows them to print Bitcoin in the background. It would be really, really bad for Bitcoin. Let's just say that. The urge to cheat is huge, and I doubt the political will exist to hold back BlackRock accountable. That topic can wait for a future rant. So, continuing along those thoughts, why BlackRock Bitcoin Spot ETF can damage Bitcoin. So this is talking about something else. So if you're aware, basically, what program you choose to use to run your Bitcoin, to see your wallets, to run your node, to mine, or what client with Ethereum, for example, you choose to stake with matters a lot, because these clients often signal which version, which history of these blockchains is true. So in the event of some sort of contentious hard fork, there's some sort of upgrade to the network. Like, let's say, I don't know, they want to increase the amount of transactions that can fit in a Bitcoin block. If something like that were to happen, you might think that it could be conservative to stay the same and keep blocks how they are. It's how Satoshi would have wanted it. It allows for another fee market, which I think is extremely important for Bitcoin to have. We can't just allow for the block sizes to get huge, because then less and less people could run these nodes. They would have to buy hard drives that could get more and more expensive, and so on, right? Or you could be like, well, let's allow these block sizes to increase to allow for more transactions, so the fees could be less and it could be more affordable that way, and that we could buy a couple copies. Just thinking out loud, if something like that were to happen, right? Well, you could have some of these institutions running specific clients or software to vote in a direction of some sort of fork or change in the history or the future of one of these networks, it could allow for changes that could allow for some of these networks to be more censorable, to change transactions, how they've occurred in the past, or so on. And if you only have a few players at the top, well, that's not decentralization, that's centralization. And these exact changes can happen, right? In the name of protecting people, in the name of stopping terrorist funding, or whatever you want to call it, right? So having BlackRock perhaps having outsized influence in these networks through perhaps running an ETF, but having regulators choke off other entry points or a software to use these sorts of things. I mean, we saw that, for example, with Tornado Cash, right? That was some sort of censorship of software to some sort of degree, and people want to follow the law generally. They don't want to break the law, but they don't really got a say in what the law is. They just hear about it on TV. Anyway, you can see how this could be quite damaging here. This is just a section here in the Bitcoin ETF. Someone had pulled out JWolf696. Something scary: in the event of a hard fork of the Bitcoin network, the sponsor will, if permitted by the terms of the trust agreement, use its discretion to determine which network should be considered the appropriate network for the trust's purposes, not your purposes, not for the network's health, not even for ultimately the most valuable fork, right? They could make that mistake, but for whatever the trust, the board has deemed valuable for them to vote on. So this could be quite dangerous. Anyway. So that's some of the tinfoil hat stuff. Plenty more going on there. I would love to know your thoughts down below. I'm not really cheering completely here about hearing BlackRock and others' entrants coming in here, but at the same time, there's the antithesis to that. A lot of hype around money entering the space, positive news, bull run. Isn't that why we're here? No, we're here for the tech, but not really. This is a post by Liz here 321. We're on the verge of the biggest crypto bull run in human history. This is what happens when you see the price climbing day after day, right? Just a shift from the post you saw last week. This is why. First Grayscale, then BlackRock, then Fidelity, now Wisdom Tree applying for a BTC ETF. How many more signs do you want to miss out until you finally start to be back bullish on crypto? Back in 2013, people thought the same. Crypto is dead. In 2017, people all said crypto is dead now. Then 2019, many were thinking, now it's over, no more gains possible. Late 2022, early 2023, Luna crash, FTX bankruptcy, Binance FUD, many crypto being sued. Crypto will die out. Wake up, guys. This is one of the last calls before the trains goes off. Institutions by the name of Grayscale, BlackRock, Fidelity, Wisdom Tree are jumping on the train right now. Why the biggest bull run in human history? Because 1 trillion market cap of the whole cryptocurrency is laughably low in comparison. Oh, there's the number. Apple's MCAP is 2.8 trillion. Nvidia's MCAP is 1 trillion. Microsoft's is 2.4 trillion. Bitcoin's dominance is almost 50%, which means it just has roughly half of the 1 trillion market cap. Now do you finally see the real potential? Yeah, Bitcoin pumps and everyone is bullish again. We have the memory of a goldfish. Yeah. But it's like a 4-year memory, right? It kind of like it goes in cycles and waves through people as they hear about this. I think there's still some people bitter about crypto because they haven't heard the BlackRock news, because they don't wake up and turn on CNBC and watch all the financial news. They're not subscribed to Financial Times and the Wall Street Journal. So they might be missing this news, and they'll snooze, you lose, you snooze, you lose. Anyway, the other big thing was Jerome Powell. There was a hearing where he came and spoke about various subjects. He talked about inflation, for example. He does believe that inflation, you can find this whole video on YouTube. I'm just going to show a segment here, the hearing with Jerome Powell that took place today. He did say he does feel like inflation is moderating, but is going to continue for some time, and it could very well be appropriate for them to increase interest rates and wait a little bit longer, especially as they get closer to where they want to be. As inflation drops to 2%, there might be more time in between interest rate hikes, which is perhaps why you saw this recent pause in interest rate hikes. So that's something that was talked about. Obviously, the market didn't like that very much. You saw stocks kind of shudder a little bit on that news. Anyway, you saw cryptos like, well, we don't really care about that. This is an opportunity to catch up to stock rallies. because we got BlackRock now, my friends. But anyway, he was also asked about stable coins. I'll show you the segment right here. Oh, well, actually, this is what he said about stable coins. That segment does not show that. He said, we see stable coins as a form of money. So that's a sign that he doesn't plan on killing stable coins completely, even though we're hearing about rollouts of potentially some sort of central bank digital currency, some sort of central one world coin spreading out, more and more conjecture around that taking place. It doesn't look like they're trying to kill stable coins just yet. But anyways, here's the section on crypto appearing to have power as an asset class. But you can see here that you have calls to get more clarity around crypto for the people.
Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 1.1 trillion was, what was that a year ago? A lot higher.
Yeah, it's had some volatility in large measure due to the lack of legal clarity, and so hopefully this committee will help that quite a lot here this summer with at least two bills, one on stable coins and one on market structure, and it'll be clear not just for Congress but for regulators, including Chairman Gensler, and obviously market participants, whether they're forming the ideas or investing in the ideas or participating in the activities.
He looks so exhausted. He's just like, crypto exhausts me. Anyway, you're not ghosted, TT. Thoughts on Monero? I have a little bit of Monero. Jas, I don't know if you deleted your comment. It looks like it deleted here, Jas. But that's so weird. Actually, the chat is not even showing up on the left here. That's odd. Anyway, Jas, I did not know that Richard Hart wasn't streaming anymore. I'll have to look into that. Maybe that would be worth covering. Yeah, I have no idea what's up with Hex Guy. When did he last stream? I haven't really been following Richard Hart, of course. I never really followed him that much, but yeah, I don't know. I don't know what's up there. If somebody knows, please let me know down in the comments. If you know what's up with Richard Hart, why is he not streaming? Anyway, here is our quote of the day as we wrap up this lovely video. And I do hope you guys have enjoyed the weekly wrap up. It has been a crazy week, but I definitely want to make sure you guys stay informed, and I'll continue to try to keep you informed on what is happening on this weekly basis. So hopefully I catch you next Wednesday live. Thanks for those of you guys who joined me here live, and those of you who just watch afterwards when you can. It means the world to me. Thank you so much from the bottom of my heart. Here's our quote. There are two ways of spreading light: to be the candle or the mirror that reflects it. Edith Wharton. Take care, everyone. Much love and stay cryptic. Peace.